65 million MSMEs, and we talk about this as a very large number and a very large definition of MSMEs, but 90% of them are actually earning less than 5 crores in terms of annual turnover. So actually, when you think about it, most of them are micro enterprises, not even small, and very few medium. And when you look at the challenges of micro enterprises, they tend to be less formal. They have less documentation, definitely lack of collateral, access to capital is challenge. And that is the segment that we are servicing. We are providing essentially unsecured business loans to micro businesses, micro entrepreneurs, and they can be women. In fact, we focus on women, and we would like for more women micro enterprises to become more formal and get more access to credit. And that's how we are expanding the financial inclusion footprint.
1,000 crores of disbursement historically, and to about 50,000 odd borrowers in totality. We've been in business for the last 10 years, and I can definitely say that the assessment techniques have changed quite a lot over time, and especially over the last 1 year, because whatever probability models, whatever assessment logics you've built, it's I don't think so anybody built it to sort of weather black swan events every other year, which is what we've been sort of having. And black swan events 2 years continuously with this pandemic, and all the things which happened before, including demonetizations, GSTs, etc. Every single thing impacted the MSMEs, who are our target customers. So obviously, there's been a lot of change in how our credit underwriting has worked. We were always technology based. We were driven by technology in terms of how to underwrite our customers. And I think we used to do decisions like in about 5 odd days before pandemic. And I think after pandemic, we've moved down to so much so that we can give decisions in like about 24 odd hours, right? And this is a segment we're talking about who may not have all of the documents in all proper, realities, because these are the small time entrepreneurs. So we've figured out ways on how to assess their income, how to use cash flows and other proxy indicators along with all the economic indicators you see out there to sort of build our own logic-based underwriting engine, which then gives us confidence that these sort of customers are also good to bring into the fold of our financing channels.
What we have seen is like whenever these kind of events comes, and then there is a kind of liquidity crunch in the market. I think the intention of the Reserve Bank of India or the government is actually, the intention is a good intention with which the different schemes have been introduced, whether it is a PSL classification or a SPV classification or this TRO thing. Everything actually, it's actually the intention is good, but then execution is becoming a kind of a little bit of an issue for us to get those kind of funds, because there is no relaxation in the eligibility conditions. That's the big thing. As everybody mentioned, and I totally accept that it is more towards the larger institutions rather than the smaller and mid-sized NBFCs like us. Particularly, we are doing a collateral-free loans. That is one more thing. I mean, everybody cannot be seen in the same lens. So that is one thing what we have to, because they are not. I mean, they are not factoring the COVID factor. The risk matrix which is adapted it's same for all the eligible institutions. I mean, result of which the liquidity availability for below A-rated companies remains a big constraint for us, because we were bouncing back rapidly after the first year in the Jan, Feb, March of this year. Actually, we were bouncing back rapidly before this COVID-2 came. The support from the larger NBFCs to us, and also support from the foreign players, foreign investors, is very good compared to the domestic banks and PSUs, that because of the different kind of risk assessment. So because they all wanted to lend to the high rated NBFCs. So even the PSL classification, which is extended up to September 21, I think it's but I mean, our suggestion is that it should actually be extended more than that. That is one thing. And definitely the schemes in our view have been helpful for the way it has been created for, but there are the eligibility conditions. For example, even in the special purpose vehicle, it is the tenure provided is only for 3 months. So if the 3 months tenure is really very small for us, because if it is not for a year, then managing of ALM will be difficult, because the tenure of our loans to the customers are different. So we would, what we would like to definitely to ease the this kind of situation is, I mean, definitely, as somebody was mentioning, co-lending is one thing which we are trying with the banks and the NBFCs. In our experience in the last 4 5 years, we have been able to crack co-lending with 5 to 6 larger NBFCs.
The bulk of the startups are happening in every small town, every village, every day, and by women often. And we, whatever it is we are doing, all of the programs, incubations, training materials, and networking, even, we have to figure out a way to do it in vernacular, and we have to figure out a way that we can bring or change our expectations of what a pitch needs to be, and what they how they should pitch, and in what language they should pitch. Unless we change our frame, we will just be self-selecting a small group of women, and that will be a disservice.
We have to look at it in a three-pronged way. One, on the customer level, then on the risk level, and then on the business level in itself. Now, how we target the customer has changed, because right now in India, only 10% of the population is able to get credit access. Only 10%. That's a very small number. So how do we access these customers who are in the tier 2, tier 3 cities? How do we reach them? How do we underwrite them? That's a big question. And I think digital lending has sort of helped us go that way. That's number one. Secondly, once we reach the customer, how do we underwrite them? How do we, understand the risk of these customers? What data do we have? And your acronyms also come into play here: AI, ML, and all of the other data mining we do on all of these customers. I think in the last couple of years, having the ability to tap into these customers' databases has significantly improved their chances of being underwritten, and then hence, bringing them back into the financial inclusion space. So how do we underwrite risk has definitely changed in the lending landscape. And thirdly, of course, will the businesses be able to give them operationally sustain the activities they are doing and hence reach these customers? I think that's also a very core part, right? At the end of the day, if you're able to technologically lever up your businesses in such a way that your operation cost, etc., is minimized, and hence you are able to bring more and more into the folds of financial inclusion, that's like perfect. So I think digital lending specifically has evolved quite a lot, and it's a changing game every day. Whatever we talk about, the next day changes the previous day over. So I think it's a very interesting space to be in. From Kinara Capital, we've been able to do a lot of stuff in terms of how we think about these business, how we underwrite them, and how we've been able to service over 50,000 business borrowers and actively help them in expanding their businesses. At the end of the day, these are MSMEs, and they contribute to about 40% of our GDP. And there are almost 60 million enterprises out there, and a long way as an ecosystem for us to go to reach and quadruple all of them.
In terms of collections, we have actually, during the pandemic, we have kind of, there is a, I would say that more than 50% of technical advancement we have done in giving the customers different payment methodologies. There are, like, we have linked with some 300 to 400 payment gateways. So how do we make them to pay even without visiting, even through customized, more of a digital payment options we have created, which definitely we would have done maybe a year or 2 year later. To be very frank, this pandemic has kind of accelerated that process. In terms of EWS, I would say that, because, I mean, to be very honest, during this pandemic, because we are more worried about collecting rather than finding the early warning signals, because of whatever the nature of the business, we are in unsecured MSME loans, and already we had some focus on this EWS before. So the movement was kind of little slow. I would say that based on the data, automatically it has refined itself by say maybe 10-15%. But the focus on exactly how do we innovate more on this EWS to prevent the further damage, that is kind of yet to begin more seriously. That's what is my opinion.
Yes.